Right, well, crypto's presence in Davos was much diminished this year. Apart from blockchain signage on the promenade, there weren't too many people from the crypto community at the meeting. To get an idea of the landscape for digital assets and blockchain into 2023, Yahoo Finance's Julie Hyman spoke with Circle co-founder and CEO Jeremy Allaire. Take a listen.
Circle's in a really interesting place right now. We have, it's our 10th anniversary actually, and we've been, diligently building out a dollar-based digital currency infrastructure business, and that business has actually thrived over the past several years. It's grown significantly, and it's really right at the kind of cutting edge of the intersection of the traditional financial system, the dollar-based financial system, and this new blockchain-based infrastructure. And so for us, the World Economic Forum convenes policymakers, it convenes major corporations, major financial institutions, thought leaders. And so for us, it's a great platform to, help raise awareness of this new innovation in dollars on the internet, and obviously to try and provide our own kind of thought leadership as well. And so it's a very strong investment, and I think we're also, as noted, in a very different place than a lot of firms that have really focused on speculative trading as their core business model. That's never really been our focus. We're more boring and stable and focused on digital dollars.
At the same time, obviously, there's been a ripple effect from the collapse of FTX and what's happened with Sam Bankman-Fried. And it not just those that were directly exposed, but that it sort of pulled the curtain back on the fragility in the industry and on the speculation that you're talking about. Have there been any effects for you guys? And what do you think the ultimate effect on the crypto industry is going to be?
Well, there have been some effects. Some of them have actually been quite positive. In the kind of risk-off environment, there's a flight to safety. People are looking to say, where is there actually safe value? And
but aren't they just pulling their money out of crypto entirely?
In some cases, yes. And if you look at sort of price movement, that's a proxy for sort of money coming out. But USDC has actually grown since the FTX collapse, and it's actually, we've seen other digital dollar infrastructure stablecoins have significant declines while we've continued to sustain. And so, I think regulated, transparent, infrastructure like ours is well suited to this environment.
Now, this is not to suggest that this is anywhere in the cards for you, but one of the questions raised by the FTX collapse is where investors stand in the bankruptcy stack, right? People who invested crypto with them. What can you tell us about where that stands at Circle for people who hold USDC?
So USDC is regulated under U.S. payments and electronic money law. There are statutory protections within the states, and USDC is structured as a bankruptcy remote asset. And so individuals can look at the reserves. They can actually see daily positions through an SEC registered and supervised reserve fund that we work with BlackRock on. And so there's deep transparency. And there are very strong protections for individuals that use USDC, just like a balance you might have with PayPal or Venmo or other electronic money providers in the world.
So maybe not backed by the FDIC, so to speak, but is it commensurate with that?
FDIC exists because banks actually don't hold your money on a full reserve basis. They take your money and then they lend it out 8 times over. And so it's FDIC, the insurance exists because the banks actually don't have your money. They've lent it out a bunch of times. And so it's really protection if there was a run on a bank, that there'd be some coverage for people. Electronic money is much more conservative. We are required by law to hold one-for-one reserves, and so that is afforded that kind of protection as well.
One of the things that was in the cards before FTX happened, well, you guys were going to go public through a SPAC. Now you're not going to do that anymore, at least not that SPAC, and at least not right now. What's the plan on that front?
Yeah, so about a year and a half ago, we entered into a transaction to go public through a de-SPAC. That terminated late last year. And, our business has evolved a great deal since 2021. We had a full year of profitability in 2022. We grew over 300%. We have a very strong business right now. And we're kind of taking a beat and really sort of assessing where the public markets are. We're in a position of very solid financial strength, generating cash. And so we don't need to go raise money right now. But we'll obviously keep our eye on the markets. And what I have said is we are committed to becoming a publicly traded company. We think it's important for transparency and trust for corporations and financial institutions and others that want to do business with us, that they have that kind of full public accountability and visibility.
But you don't feel any urgency to do so, it sounds like. Okay. Something else you've also talked about in the past is getting a banking charter. Is that still in the cards? Is that something you were interested in pursuing?
Yeah, so we specifically said we wanted to be chartered under federal banking supervision as what we called a full reserve digital currency bank. Now, that doesn't exist in the United States. But what is happening is there's a effort with, I think, sponsorship from the Federal Reserve, the Treasury Department, and in Congress to establish new stablecoin issuing charters, and that's really around new regulations for federal supervision of firms like Circle. We think that's the appropriate kind of supervisory structure at a federal level. What we call it, what that's called in the end, that'll be up to Congress and the ultimate regulators to determine what we're called. But we think that's the right path for the United States. We also think that's the right path for Circle.
There are some regional, or I should say state charters that are going in that direction. Paxos, one of your competitors, has a charter from the New York State, the Department of Financial Services, that sort of ensures funds are never commingled. Is that something you would want to pursue, and why haven't you already?
Well, so we are regulated by many of the, almost every U.S. state and the banking supervisors and financial supervisors. We're not allowed to commingle assets either, so there's really no distinction there. But trust bank charters are limited in scope. I think what the Financial Stability Board and what almost every major national regulator is focused on is really defining stablecoins as a kind of payment system and needing a different level of prudential supervision. And we think that's ultimately what's appropriate. That's what's coming into place in almost every other major jurisdiction. And so I think we're really expecting something like that to emerge in the U.S.
And just to close out, I mean, as we think about where crypto is right now in the wake of FTX, is there more fallout to come? And what is 2023 going to look like?
Well, I look at this, having been in many boom and bust cycles of technology for the past almost 30 years, have seen sort of hype cycles, technology growth cycles, and the troughs of disillusionment, as people say. And my view looking at things right now is there are absolutely going to be more firms that don't survive, whether it's because of risk decisions they've made or just because they can't raise more capital and they can't continue to build. At the same time, though, there are some very solid, durable companies. And I think those companies are going to continue to compound their leadership positions. I think we're one of those, and will really grow significantly.